Hey guys, what's up? Alec back with the daily stock market, and look at that. Apple is up 13.5% in the last month. And if we pull out to the last 12 months, we can see that Apple is actually positive on the last 12 months on their stock price. And remember, they were as high as up 22% at one point at $182 per share. So in this video, we're going to be talking all about Apple. Make sure you watch to the end of the video because we're also going to talk about other big tech stocks like Amazon, Microsoft, and we're going to try to talk about as many big tech stocks as we can and give our opinions on them because we haven't done a big tech stock video in a while. So I think this is a good time to do that. So before we start this video off with Apple, make sure you subscribe with post notifications on and leave a big thumbs up. We have Apple at $150 per share. 52-week low is closer to $130 per share, and a multi-year low is closer to $110 per share. So the question is, can Apple get that low? How will it report during earnings? Is it up only from here, or is Apple going to fizzle out a little bit and go closer to that 52-week low or even a multi-year low? Now, we also saw this Twitter post going around that gained a lot of popularity. We can actually see that Apple is currently doing the same thing it did in the last two bear markets in 2012 to 2013. And in 2015 to 2016, bouncing to the 40-week moving average. The 40-week MA is at $158 per share. When this bounce is over, it will start the second leg down of this bear market heading to its 200-week MA. So that's very interesting. Basically, in easier to understand terms, they're saying that the resistance is close to about $158, $160 per share, and the support is going to be closer to $105, $101 per share, $110 per share, somewhere in that ballpark. And most people actually agree with this. So Apple could definitely report some bad earnings. I have some price alerts set at 135 to start dollar costing averaging a little bit heavier. And then after that, I have price alerts set at 115 to buy shares a little bit heavier. And then my last price alert is set at 105. And that's where I'm going to be loading the boat definitely a little heavier on Apple. And remember, there is a good chance that Apple's going to rise to around 155, 180, even $160 per share before it proceeds to fall around 30%. In my opinion, we could see Apple getting a haircut. Moving and cruising on to the next stock, AMZN, Amazon. Everyone knows them. Everyone loves them at $113 per share. And in the last month, they're up 8%. However, if we pull out the last 3 months, we see them down 25%. Is this a buying opportunity? Are they going to stay down for a long time? 37% downward movements. The stock chart price looks a lot different than Apple, for example. Amazon currently at a multi-year low. We can see in 2018, Amazon was almost the same price as it is today, even though that was a peak in 2018. So remember, I've already done a lot of updates on Amazon on this channel, so we won't spend too much time on Amazon. But I have price alerts, just to reiterate, at $105 per share, and $95 per share is when I want to buy the heaviest. I think there's a strong possibility we can see $95 per share. And then my final price target to load the boat is $85 per share, which would be a consistent multi-year low on Amazon. Obviously, there's a lot of reasons to be bullish on Amazon. They're more of a long-term play, by the way. Their market cap is a $1.1 trillion. So I think they definitely deserve a $2 trillion market cap, and they will be a $2 trillion market cap in the future. They also have a PE ratio of 54, which for Amazon, considering the moat of Amazon and the competitive edge that Amazon has and all the companies acquires and that it has acquired, I think the PE ratio around $54 is pretty fair. However, if we see Amazon dropping to $95 per share, that PE ratio will come down a significant amount also. It's always a beautiful thing to look at Amazon's income statements and balance sheet, but here we see the income statement is performing very significantly. The net income, you can see that has been gaining by about 300%, 17%, 83%, 56%. So on average, it looks like the net income has been growing around 30% or more every single year consistently for the last 5 years. So that's a very great thing to see. We also see that the net income is 33 billion, which is higher than it's ever been. We see the total revenue has been growing around 30%, 20%, 30% every single year. And currently, the total revenue is 469 billion. Also see on average, analysts have a 55% upside on the next 12 months on Amazon. And I think if we see Amazon price even lower than it is now, obviously we're going to see more of an upside. But it doesn't hurt to dollar cost average under 115 per share for Amazon, especially if you're a long-term holder and you plan on holding for 24, 36 months or more. So as we scroll down, we see a lot of five-star analysts giving their opinions on Amazon. And this is all reiterated in the last week, 3 days ago, 4 days ago, all five-star analysts. And most of these analysts have $180 per share in the next 12 months for Amazon. So needless to say, we have a lot of analysts extremely bullish on Amazon right now. We have Ronald Josie from Citigroup, five-star analyst with a $180 price target. Brian Fitzgerald from Wells Fargo, five-star analyst, $200 price target. Just reiterated this 5 days ago. Morgan Stanley analyst, four-star analyst coming in, $175 buy target. Eric from Goldman Sachs, $170 price target with a 62% success ratio. Okay, even 12 days ago, 2 weeks ago, we can see some JPM analysts have actually been rating this stock, and majority of them have a $180 price target, which would imply a 55% upside from current prices. That's why I'm dollar cost averaging under 115. However, if it goes under 105, I'm going to be buying a little bit heavier, and $95 is going to be a rare 95 and under is going to be a rare opportunity for Amazon that we might not ever see ever again. So needless to say, I'm going to take extreme advantage of buying the Amazon dip. That leads us to our next stock though, which is a Microsoft. Okay, if we look at the last month, up 4%. The last year, they're still down 9%. So unlike Apple and some other stocks, they're down on the year. It could be a good buying opportunity. However, they're not anywhere close to a multi-year low. We need to see them closer to $200 per share or under $200 per share. And that's really where my price targets are set. I have some set at $185 per share. Microsoft, under $200 per share. We really only have to see them drop 20%, which is extremely realistic with earnings coming up and recessions and this, that, and the other coming up. And if we see them at $185 per share, it's going to be closer to around a 30% dip, which I think is definitely possible for Microsoft. So that's where my price alerts are set. I'm not buying too much. I used to have a $5 reoccurring investment. I paused that for a while. Again, I want to see them under $200 per share. However, we do see that PE ratio at 26, implying that they are really not that overpriced if you consider their earnings. They also have a dividend yield of 0.9, a market cap of 1.9 trillion, which is significantly larger than Amazon, for example. But what they bring to the table, Microsoft really does stand out. So let's dive into what the analysts have to say about Microsoft. So on average, analysts have a $350 price target on Microsoft in the next 12 months, which is around a 35% upside. I think that's definitely possible, but more in the next 24 months. You know, that's a lot of growth for a company that's already as big as it is. The lowest analyst has a $298 price target, which is still a positive gain from current day prices. We have a lot of five-star analysts coming in and rating Microsoft as well. 3 days ago, 4 days ago, 6 days ago, 10 days ago, 11 days ago, all five-star analysts with price targets above $300 per share on Microsoft in the next 12 months. So if you're a long-term investor, you could take that, use that to your advantage. Dollar cost averaging is going to be the best thing to do if you're looking to buy Microsoft today at today's prices. I think in the next 60 days, we're going to definitely be going lower. You know, even in the next 12 months, if we end at $350 price target, which analysts think we will on average, I think in the next 60 to 90 days, we'll definitely see lower prices than they are today. And if we want to compare Microsoft's income statement to Amazon's that we looked at earlier, we can see the net income on Microsoft's income statement we have pulled up right now is growing by about 20, 15, 38% in the most recent year, which is actually spectacular. And the total revenue is growing by about 15% on average over the last 12 months. So overall, Amazon's doing better at total revenue. They're bringing in more total revenue. They're growing total revenue more rapidly. However, we see Microsoft is a more profitable company, growing net income quicker and also bringing in more net income, especially compared to the revenue that it's bringing in. The net income that a Microsoft is bringing in compared to its total revenue is actually crazy. And the last stock that we'll be talking about in this video is going to be Google, ticker symbol GOOGL. And the company's name is Alphabet Class A, but it is Google. That's just the parent company's name is Alphabet. Okay, at $2,200 per share, you can see up top there's a little bit of a message. Google is performing a forward split 20-1 on July 18th, which is Monday. The price chart display may be impacted during this time. So this is the last video and the last time you'll ever see Google's stock at $2,240 per share. They're going to perform a 20-1 stock split. When you wake up tomorrow morning and log into the stock market, Google stock's only going to be trading for about $100 per share, which is going to be awesome. And for every 1 share of Google you own, you're going to now own 20 shares. So it's just a normal stock split. You should be familiar with stock splits at this point. And make sure you subscribe with post notifications on, because in the next video, we're going to be talking about like Tesla and other crazy stocks and awesome stocks that we didn't get to talk about today that other people are recommending that we talk about. It's going to be one of those most popular stocks videos. So to finish off with Google, we have them down 12% on the year. Okay, like Apple is up on the year, Google's actually down 12% on the year. Not at a multi-year low yet. We want to see them closer to around $1,500 per share or 2020 lows. I would honestly even be happy to see them around $1,700 per share. I have price alerts personally set at around $2,000 per share, $1,700 per share, and $1,500 per share. I'm going to have to reset those price alerts due to the stock split. However, I use Yahoo Finance for most of my price alerts, so it should probably just automatically convert over and do the math for me. So we have a 20 PE ratio on Google, implying it is the best deal out of all the stocks that we talked about in the video. Google is the best deal right now if you're just looking at the PE ratio, which is always a great metric to look at. Market cap is a little bit bigger than Amazon, but a little bit smaller than Microsoft. If we look at the income statement on Google, we can see that the growth for net income has been rapid. Now, if we go over to total revenue, they're also growing consistently on revenue. 20% looks like per year on average. The current total revenue is closer to 250 billion. Holy cow. And if we go over to net income, yeah, they had a standout year in 2021 due to the pandemic. A lot of people were advertising, and ads are going to be their main business and how they're making most of their money. Google ads are the #1 way small business advertises. But if we look at the net income, 76 billion to that total revenue, 267 billion, very good ratio from net income to total revenue. And if we scroll down to the balance sheet, A+ on the balance sheet, A+ on everything. This is a great company, and that's why I'm dollar cost averaging into Google even at the current prices, is because their balance sheet's fantastic, their net income's fantastic. $76 billion in net income. What other company can you find in the stock market that's doing $76 billion in net income and $257 billion in total revenue? You'll be extremely hard pressed to find a company like this. I want to be a part of Google for the next 5 years. I want to be a part of Apple for the next 5 years, Amazon for the next 5 years. So that's why I made this video, to go over all my favorite high conviction, high tech stocks. And you can see that Google, on what analysts have to say about them, 37% upside in the next 12 months. And these were reiterated fairly long ago, so you can take them with a grain of salt. But we have some analysts even rating Google as high as $4,000 per share in the next 12 months. I think, we'll see Google closer to $3,000, $4,000 per share in the next 24 to 36 months. Okay, but that's what I really want to be a part of Google for the long term. I see Google being a company that never dies, and Google stock would be probably a good company to hand down to your grandkids further down the line, or to keep in a retirement account, a Roth IRA, 401k, anything like that. And needless to say, all the stocks that we talked about in this video are going to be great for long term, and I think are going to be building the future and shaping the future of our world, all of the stocks that we talked about in this video. So make sure you save this video for future. Come and look back on this video 12 months, 24 months from now. It'll be very interesting. So save it to a playlist that you'll check in the future. Like this video, share this with a friend also so they can be notified about some of these giant growth stocks, blue chip stocks. And make sure you check out my close friends list if you haven't already. We have over 500 positive success stories here now on the close friends list, and some coming very recently too. In the recent weeks, we've been making a lot of money on the close friends list, made some plays in the close friends list this week. DM me for more information. Made $320. This happens when, and thank you to another happy student. Took profits just to play it safe, up 40%, $100. Thank you for the puts. I'm up 63% in the week and almost 80% in the month. Yo, I just wanted to say thank you. I sold this morning when I saw I was over $200 just to make sure I took profits. I lost $60 on auto. I can't tell you. I can tell that you really do look out for those that in your group that join, and I just wanted to say thanks. And this guy was up 63%. Mike, he up $238. There's countless amount of stories and people who've had success with this program. I'm also going to be raising the price on the option group, so if you want access to my option trade, it's going to be an additional fee on top of just my regular stock market trades, because a lot of people recently are making money on the options group. So supply and demand, there's a lot of people joining, and I can't service everybody all at once. So if you still want the original price and the discounted price, make sure you reach out to me here on Instagram, and I'll shoot you over an application so that way I can help you out the best way possible. And then I'll shoot you over my website after that. And if it makes sense to you and if it's inside your budget, then we'll help you go ahead and get you something started today too. Access to see my option trades are going to be going up too. So I'm going to be shutting the close friends list for a while, and then the option course and the option trades are going to be going up. So if you want to get in now's a great time with earnings season approaching. That's why I'm shutting too. It's because it's going to be super busy, and I want to give everyone enough attention. So with earnings season around the corner, a lot of companies are going to be reporting earnings. We're going to be leveraging that with option contracts. And if you're a beginner and you don't know how to do option contracts, that's okay, because I have a video program step by step how to do option trades, how to trade options on your brokerage, and then you can follow along with my option trades that I post for the close friends list only. So guys, I'll see you in the next video. Make sure you subscribe with post notifications on. Remember, don't time the market, buy the market. Peace.